Perfect. Right. So just give me 2 seconds. Yeah, let's turn some microphones on so people can come and say hello, come and speak. Glad to see you. Right, cool. Can we see my screen?
We do.
Did you say no?
We do.
Oh, we do. Right, let me just open the chat quickly because I've got my monitor out now. So have a look at the chat. There we go. Cool. I can see the chat now. Right, perfect. So how's everyone's morning been? What trades have we taken? What have we done? Have we had any wins, any losses? How's people's mornings been so far? We'll talk about this morning and then we'll also go over yesterday and a few other bits as well. So has anyone taken anything this morning? I know a couple of people took some shorts, but what I'm going to do is I'm going to go over the logic behind how we use the new ranges. Well, not the new ranges, but how we view ranges from that fractal understanding. Has anybody, I know not everybody would have done, but have people had a chance to have a look at the new theory video so far that we put out yesterday? If you have, that is a perfect example of everything that we talked about in that. So with that, in the last section of the video, so like the last 15 minutes, we talk about when a high or low can be deemed as weak using the ranges. And this is where this morning that really came in and sort of showed us, having that understanding and logic, why in theory longs were valid to take. And we can see here. So what I'll do first is I'll just quickly zoom out to the higher time frame because what we've had a sort of shift from that last time we sort of had our Zoom call. So when we understand and look at, this is very messy here. Let me just clear this up for a minute. Obviously, what we can see and understand now is we've been bearish on the daily for a long time now, and we could see that overall we were putting in this complex pullback to this daily structure. And obviously, we can see now what we've had is we've now had that internal breaker structure bearish. So what we've done is we understand it's the highest point that's led to the breaker structure. So internally now we've had a new internal protected high, which is now giving us this supply range, which we can see the high to the low. And this is in line with the overall swing structure. Okay. So in theory now, this is giving us structural alignment to potentially come and take out this low. Now we can see that the demand levels that I've drawn out are in green because for me, green POIs are more reaction, no follow through zones where we don't expect to see strong moves essentially play from because we understand that when we're against everything and we've had structural alignment occur to come and take out a major swing, any sort of demand levels should act as reaction points. Now, the one thing that we need to keep and understand and remember in the back of our heads is if we had a look at this swing structure, it depends how you deem this. But as we can see, we sort of had this high to this low, which led to this breaker structure here. So obviously we understand the lowest point that leads to the breaker structure, is the swing low in this case, for example. But when we look at this and dig deeper into it a little bit more, when we look at swings, if we look deeper into the internal structure, we can see we had this higher high, higher low, higher high, higher low, higher high, which is now put in a new lower low. Okay. So obviously we've had now this internal break here. So we now have an expectation to see a new lower high potentially before a new lower low. And for me, I can more now likely see potentially this low to get ran. Now, the only thing we need to keep into consideration is the mitigation to the demand level that we've had to the left, okay? Because we understand that we've mitigated weekly demand to the left. This could definitely fulfill a move to come and push prices higher, okay? And we've had a rather large bearish run down and we've mitigated weekly demand. So it's very feasible to potentially see a deeper pullback occur here. But what we need to understand is when we look at internal structure, this is now a new protected high in the market. Okay. So we can't be taking longs from here or anywhere down in here and coming to be targeting to come and test up into here because we understand that we've now put in a new protected high in the market, being this high here, which we look at on the daily, being that internal structure. We can see high, high, low, high, lower, low. Okay. So hopefully that makes sense. So we understand, let me just get all my drawings back up now. Hopefully I haven't lost them. There we go, cool. So if we go to the 4 hour, obviously we can see it's a little bit messy here because obviously it's got my drawings from the charts that we've had. But obviously now we understand that we've had that breaker structure bearish internally, and we've now had potential reason to come and put in a pullback at a minimum with essentially an expectation to see a new lower high before a new lower low. So when we come to sort of intraday structure today, all we've been doing for a long time now is just been putting in this bearish market structure. Okay. And what have we had down here? If we understand the utilization of ranges right now, as we came into this morning, we were contained between this swing high and this swing low right here at a minimum. So for me, This is a protected high. This now being my weak low on the 1 hour, okay? Being the 1 hour, okay? So we understand that we've been so extended. We've had this massive impulsive move down and we've yet to pull back. So we can expect a pullback. But like we always say, we don't assume structure. We let the intentions show us that we want to, in this case, pull back. Now, when it came to intraday structure this morning and we're looking for the shorts, I too looked for a short, but I also took a break even. And I think a lot of other people did. And let me just explain the reasons for that. So we can see as we came into this structure this morning, we can see we had this lower low, lower high, lower low. Simple bearish market structure. We have an expectation to see a new lower high before a new lower low. So for me, like we said, we don't assume structure. So at this moment in time, this high was still protected. This low was weak. So it's perfectly valid to look for shorts, okay? So as price came up, we had the main two supply levels, which is what we indicated for me were, it was this, let me just go and have a look on the 15-minute again, sorry. It was this, let me just move the range to the side quickly. So it was this 15-minute level here. We can see that it's engulfed buy to sell. And we can also see as well that we had this buy to sell engulfed candle and the 50% wasn't mitigated. And if we go down to a lower time frame, there was potentially something in there as well. So they were my two main levels I was looking to short from this morning. Now, as price came up, right, and I think everyone could agree, we didn't get any confirmation to come and take this short, even on the seconds. So when we were looking at refined levels, I didn't get any sort of seconds confirmation to look for shorts. So all of these levels got blown straight through. But what we need to understand is that we understand the utilization of supply and demand ranges. This level of structure is not invalidated until the supply range fails and we get that breaker structure. So what we did is we came and we mitigated this like extreme sort of point of the supply range. Okay, if we have a look and see what's going on here, we can see we had this inducement just above this unmitigated wick right here. And if we go down the time frames, we're able to identify and see, you know, you've got this unmitigated wick. And if you were to go down again, you'd probably see that it's the candle, but I just saw it as the, here we go. So you can see here, you've got this buy to sell, and you can see here that you've got that candle right there and potentially that, but that was mitigated from here. So yeah, so you've got this 15-second engulfed buy to sell. So we had the inducement just above it. It's at the extreme of the supply range. So this is still, in theory, valid to look to take short. Okay, so my trade originally, I was looking to get involved here on the 5-second, but for me, the level was my stop loss was too big to get involved. So personally, I was looking for a 5-second. And if we just have a look and see what we've got coming up here, we can see that we had follow the ranges, high, high, higher, low, higher, high, mitigation back into the range. Then we had this larger range, mitigation in, larger range, larger range. So at this moment in time, we were contained within this, excuse me, it's too big. I need to draw that one there. So we can see it was actually between this range here, but we can see that what's happened here is we got this interaction here. So we've got the higher high, higher low, higher high. So as price came down here and we got this reaction to this demand level right here, because obviously this is the sell before the buy, but we refine it to the engulf level. We got this interaction, okay, and we got the change of character, which would have been originally this level. And then obviously the invalidation of the range would have been this low right here. So originally I was looking to see if I could sell stop this on the change of character. But for me, my stop loss was a little bit too big. So if I was going to cover that, I was like, you know, you're looking at a 2.5 pip stop loss. It was a little bit too aggressive to use the 1 second because I didn't like what we were mitigating. Yes, it was a 15-second. So it's valid to use the 1 second because I don't want people to go start trading the 1 second unless you really know what you're doing. But I am testing the 1 second when we hit specific points. And this for me wasn't a strong enough level for me to want to use the 1 second. So I stuck to the 5 second. So understanding that, it was perfectly valid to hit a stop order here, but it was a little bit of a big stop. And there would have been a valid 1 second entry, but I'm not going to go into that. So I was now following the understanding of, okay, how can I get involved in this if price does want to continue short? So when we had a look at this, I was following the ranges down. So I dropped down. If we look at the 1 minute, if we just go across, we can see that we are contained within this bullish structure, high, high, higher, low, higher, high. And in this whole impulsive leg up, we did not get any sort of pullback. Okay, so this was all one leg of price, okay, from this demand range. So when I was looking to see, can I sort of catch a pullback trade to come and take it at a minimum to see if price is eventually going to come and take this low, but I was looking and seeing, right, how can I get involved short? If this mitigation is to hold, okay, If this mitigation to this supply is going to hold, then I want to try and get involved. So when I had a look at I dropped down to the 30-second and I had a look at like the lower time frame ranges within this. So I saw we had this demand range, I expanded out, and then we had this demand range. Okay, we had the higher high, higher low, higher high, and then price then put in a new lower low. So I was looking to see if I could catch a potential lower high to come and take it lower, which is actually what I caught. But the intentions didn't play out to come and test it short because we got this reaction to this demand, which we'll go over in a second. So my entry, I'm not sure why it wasn't on there. So it wasn't the best trade, but it played out. It ran a little bit. But the reason for the trade, if we have a look and go down to the 5-second and see what we got going on here. So my entry was based off this. So if we have a look and understand, this was the 30-second range from this low to this high. When we got the change of character, we can see that this low broke out and tapped back in and mitigated this range right here. Okay, so we had this was the reaction to this demand. This supply range caused this demand to fail, which then gave us this right here. And then we had this unmitigated wick with inducement just above. But we could see here that what happened as price came and mitigated into this, it turned into a new demand range. So I was saying, if now this mitigation, because it's a very specific mitigation, because when you understand the sort of 30-second structure being this higher high, higher low, higher high, as this supply level was the level that caused this demand to fail, we came and mitigated into that supply level and then failed. This level here held a little bit of weight. Now we can see originally here that you could have looked to short from here, okay, from this level right here, if you wanted to, but I wasn't too convinced just yet. I was waiting to see what happened. Price then came up and mitigated that super refined wick, okay, with inducement just above. But my entry wasn't based off that because currently we were contained within this demand range. So what I did is wait for price to come back down. We can see then we got the reaction to this demand level right here. We can see we got the change of character, but we didn't structurally confirm we were going to come lower until this demand range failed. So my order, it was a little bit aggressive, but I wanted to try and be in it. I covered this low and I had this on with a 2-pip stop. So you can see I was just covering the flip because nothing really happened here. We had a little bit of interaction here. So I was a little bit cautious of that. Then this was the flip that came here, broke out. We got the mitigation in, it kept me in. And then price came and tested into this demand. So it only ran 3.2% and I got taken out for break even. But now I want to talk about the logic behind what happened this morning and why I was happy to take a break even and why this is where the fractal understanding of using these ranges really comes into play here, because a lot of the time ranges have just been used to understand order flow and when we get changes of characters previously. But the way that I've implemented them into here is really understanding how to read structure from a fractal level. And I don't think I actually posted it, but I was messaging Wes the other day and I was waiting to go out to see a friend and I was scalping Ethereum, and in 30 minutes using the fractal ranges in 30 minutes, I think it took 132 hours or something. And it's just understanding how to use these fractal ranges because they are so powerful and they're fractal across every single time frame. Doesn't matter if you're you're almost fainted, so they're fractal, right? And this is what I mean. Structure is structure. And, this is why it's so important to really understand structure from that detailed level and not solely rely on timeframes to go M15 and 4 hour bullish, we're going to hit the moon, because it's so much more than that. There is so much more to it. So if you've seen the video that I posted yesterday, on the last half of it is talking about when a high or low potentially becomes weak. So we were contained within an overall bearish swing structure being this larger supply range. Okay, that is our swing structure for sure, right? But we understand, in the back of my mind, I was thinking, okay, we are very extended. We don't assume structure, but we could potentially see a pullback occur from here. But I'm not going to assume that. But when we then come down to the lower time frame, right? And this is where we have a look and understand mitigations, okay? If this mitigation to this supply level at the extreme was going to fulfill itself by, we understand the structural expectation of this bearish swing structure is to come and take out this low. If this mitigation was to fulfill that, this low would have gone, because this is the internal swing structure. So we can see the demand ranges being put into play. High, low, higher, high. Okay. If this mitigation to this supply was going to hold, this low should have broken, because what happens then is we've then had structural alignment occur. So instead, what would have happened? This would have broken this low. This high would have then become protected and not weak. Then you can look to catch the pullback to take it lower. Because we've had structural alignment occur within the swing structure, this high would have come protected, and then you can look to short. But what we needed to see and understand here is this was where my logic was based off this. So what we can see here is we had the most recent demand range was this M1 structure, high, 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 low, high, high. We have an expectation currently of this swing structure to see a new higher low before a new higher high. Now we understand the overall swing structure still being bearish. Okay. So we don't assume structure, but what did we see here? So the reason I moved this to BE, okay, is because when we have a look at the internal structure here, if we just drop to the 30-second, we can see the supply range is being held. I won't draw them on because I don't want it to get too messy, but we can see higher high, higher low, higher high, lower low, lower high, lower low, lower high, lower low. Okay. So what should have happened if this mitigation was to fulfill itself? This high shouldn't have broken. This demand range, supply range at the time shouldn't have failed. We should have seen a new lower high before a new lower low. Taking out this low here, that'll give us an internal structural break bearish, leaving a new protected high. We then come and try and catch the pullback to potentially in this supply level to take it short because we've now had structural alignment occur, but we didn't, right? And this is why, so when I said in my chat, I was in this short, but the reason I moved BE, because the second now we mitigated, right? So it was originally this supply range right here. Okay. We can see the mitigation to the most extreme demand level, supply range into a demand range when we got this internal breaker structure here, right? So when we got this internal structural break right here now, we've had structural alignment occur, right? Think of M1, higher high, higher low, higher high, demand range, okay? What's happened? Prices pulled back. We've gone structurally from a supply range, had an internal breaker structure and put in a new demand range. So understanding the logic about what we talked about in the most recent theory video, we've got alignment occurred. We've had now internal structure realign with the larger swing structure. So even though, right, this is a mitigation to an M15 sort of supply level, and it's at the extreme, and we understand the higher time frame swings hold much more weight than the lower time frame, but we have to think about the logic behind it. And I was saying to people, if you're looking to now short from here, you're trading against a weak high. You're trying to, because this now is weak, because this would only become protected once the swing low goes here. But because we came down, we mitigated the extreme of the range, and then we've had internal structural break bullish, and we've now started to put in these demand ranges. We've now got structural alignment to this swing structure. So now this is weak. So in theory, this is getting ran. So in what I was thinking now, and this is I don't want to start taking loads of trades just to sort of doing like, but you can see here, like you can essentially having the logic of this potentially being weak, you could look to short every range, long every range. So you can see here, price came up, try and get involved along here. Okay. Another range here. Mitigation into there, you definitely could have looked to get involved in a trade there, right? Same thing again, range. We can see price comes up out of the range, in there, range, break, right? And the ranges hold. This is exactly what we talk about. When you've had structural alignment, these ranges should hold until you take the swing structure, okay? So the only reason, and like I was saying to people in the chat, I would only be looking to take a short here if we see then structural confirmation to want to come back bearish, because we've got structural alignment within this swing structure. So as you can see here, if we would have got this high, 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 low, high, high, and we potentially then got a break bearish, then we could potentially be looking then to come and take things short, because once again, what's happened now, we've left a new protected high. This then becomes weak because it's failed to come and take out this swing structure. So then you can look to short to come and take it, because then you've had structural alignment occur once again. Well, not structural alignment, sorry, but the mitigation here failed to take the swing. So then what's happened is when you've had structural confirmation, not change of character, once you've had structural break confirmation bearish, okay, then that becomes weak, and you can know that as weak. So then you can look to short, but you can see, understanding the high time frame ranges, they held all the way until the swing structure got broken. Please don't start snoring, dog. So yeah, I mean, other than that, that's the reason why I didn't look to short. The logic was there for that short. It wasn't the best place to trade. If you caught it up here, then brilliant. But what I would have done, if you managed to catch this short, once you saw this internal break bullish here, I would have then looked to then partial and take partials off here, understanding now that this high has then become weak. So has anybody got any questions about that so far? Does that make sense? Hopefully that does make sense. Can people hear me? Cool. Right, cool. So that's that this morning. So, oh, where's what you're saying? Can I not hear anybody? Oh, I'll talk about that. Wes, you can talk. I don't know. Yeah, okay, that's fine. Right, okay.
Okay,
So
hello.
So yeah, I'll talk about this, and this is
This one is a subtle shift in order flow. So I can imagine, especially people starting out with these smaller ranges, that but this it mitigated absolutely nothing. So there was nothing to trade off. But
I'll explain.
We can all agree that this, of course, order flow on this specific time frame.
Yeah, I'll talk about the logic behind this, right? So the reason when we talk about ranges, right, and this when we talk about structure, right, and this is where when we use these ranges, you'll really start to learn to train your eyes. And I think it was Nick who talked about this and asking questions, and we're talking about understanding the significance of ranges. So we understand that a range isn't fully mitigated until at least the 50% of it has been mitigated, right? And I've got lots of refinements to show, which are really cool when the content comes out. As you can hear in my voice, I'm quite excited about it. But yeah, so what we need to understand and look at is when we look at swings, okay, this shift here, there's two things you need to understand here. One, as Wes said, this didn't give any valid mitigation to anything significant to the left. Okay, first of all, if we looked at M1, it didn't hit an M1, right? So it didn't really hit anything. But this is where now, if we zoom out and have a look at this, yes, this gave a change of character, but what this did is this is understanding that when we put in this supply range right here, you'll soon start to see it. This supply range was acting as a complex pullback to this whole larger overall demand range. Because you can see, if you zoom out and have a look at this, you can see lower high, lower low, high high, high low, high high, high low, high high, high low, high high, high low. So you can see it clearly, right? And this shift in order flow, or this sort of supply range that's happened, two things. One, it didn't mitigate anything significant to the left, which is something that you really want to see. Obviously, we want to see things hit something quite significant. Obviously, when we got this, for example, I just want to zoom out quickly. When we come and have a look all the way up here on the M15, I think, for example, this is where you've got to understand price doesn't always have to go off something significant, in the sense of, I think we all had this sort of 4-hour supply level here, but price came and mitigated like this little supply level here. It was still a range that was valid, but we obviously still expected it to come here. But just understanding like the utilization of ranges is just so important to understand sort of what price is going to do next. Doesn't matter of the time frame, because these time frames are fractal to absolutely everything, right? It doesn't matter whether you're using the 1 second or the monthly, for example, right? So yeah, so that's the reason why I would have been looking at here. So to me, this at the moment, considering the mitigation to not really anything significant, and understanding that we're still contained within an unmitigated 50% range, which looks like high, 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 low, high, high, I would have been looking to long that. And only until this low went, for me, has that given true structural alignment then to potentially denote this as weak. Okay, because when you look at things, this is the difference as well, where I think it's a lot of people like to keep things as mechanical as possible, right? So where you might go here, we've had a change of character. Okay, we've had that shift in order flow, let's short, right? But there's only so far you can take it with being mechanical, right? Because I've done that mechanical strategies in the past, and the way that we structured the course to map out structure and things, we've tried to do that in a way that's step by step, that's easy to follow. But when you get to this level of detail, this is something that you really need, that you'll eventually train your eyes to see, right? It's the same thing here, right? You can see this high to this low, right? Another change of character, but you can still see we're still contained within this bullish swing, right? And that's something that you'll see over time, right? And that's something that, but what you've got to understand is, yes, it's a little bit more complex than just M15, 4-hour bullish. Let's look for POI and hit buy, you know, because there's a lot more of a deeper understanding to it than that. But when you truly understand it, your trading will change completely, because I've seen the progression that I've seen already. people going from taking crazy losses to have their strike rate's just been incredible, avoiding unnecessary losses. And, you know, it's a credit to the work you've been doing, but the work that's being produced is incredible. And the questions that are being asked are not like questions that we go, you know, or, you know, that they're not putting in any work. That's good, solid questions that both me and Wes have to think about. You know, they're not just simple and easy questions to answer, because the work and questions you're asking are incredible. But I just wanted to touch upon that quickly. You know, so obviously these ranges and things, when you start to really test them, understand them, they'll change your trading, not just through order flow, but through structure as well. So, yeah, I hope that makes sense. Obviously, then if we just have a look here now and see what we've got going on at the minute, we can see what have we done. We've mitigated, obviously, this and mitigated supply right here. Obviously, now what we've done is we've put in a new protected level. So what we can do is potentially now, in theory, for the New York outlook, essentially, potentially looking for this, which would be the, I can't see. There we go. So that'd be the protected low, weak high. Obviously, understanding that currently we're bullish, okay? So we could potentially looking to take prices higher. If we just come up to the 1 hour, we can still see, though, that we are still contained within this whole overall bearish leg of price right here, okay? Because you can see this high has led to this low, okay? We haven't mitigated anything in premium just yet, and we haven't mitigated a more higher probable level, because if we look at this, you know, it's not really done much. It's just an imbalance on the 1 hour. So this could, in theory, come and take this low right now. But what you've got to understand is that, you know, this wasn't a great level anyway. And now on the 15-minute, we've now put in a new protected level. So I wouldn't be hesitating to look for longs to take prices higher. Now, while I've been getting content done and things, and I'll be honest, when I try and trade myself for 2 sessions a day, and then obviously with questions and things as well, and then make content, sometimes it can be a lot for my brain. So I didn't trade on Friday. Now I've had a look over, was it Friday? I can't even remember. Was this? No, that wasn't this morning. But what we'll do is we'll go over, because I think the last Zoom call we stopped at was at this point right here. Okay. So Wes, you caught some shorts here, didn't you? I think you said you caught some shorts here.
I did.
Yeah. So, yeah.
I got, I believe.
Yeah, Scott, that's the thing, right? Because there's understanding structure, right? Is that, you know, obviously everything's built around structure, right? It is all like, when people say structure.
I got it yesterday, Jordy.
Say again.
I got it yesterday. So.
Oh, it was this. Oh, yeah, it was this. Sorry, wasn't it? I was looking at this. But yeah, we'll go through it anyway, because the last Zoom call we cut off here. But yeah, so the ranges, right? Because this is the thing, and this is where I believe timeframes really let you down, because, you know, at the end of the day, when you just use a specific like 1 or 2 timeframes and say, when this has done this, we do this. But, you know, when you actually dig deeper into it, you know, when you understand to actually read it, because the way that, you know, sort of I do it, I talk about it, we're understanding things through price data and not timeframes. So when you come to actually understand the price data, so all of that understanding we had going on down here, regardless of what time frame we used, we've just managed to understand that through the utilization of swing structures using ranges, right? And understand when we've had, you know, alignment occur. It doesn't matter what time frame you're on, you know, that's how we've managed to read that. Okay. And that's why when you sort of, like you said there, understanding range and weak highs and lows and things, because and understanding expectations of structure, you know, that's what I mean. But it's all around structure. And this is why when people say trading's easy, entries are easy, because most people think they struggle with entries, right? But entries are actually really easy. Okay. And they think their structures to an incredible level, which it probably is at a good level. But a lot of the time it's still understanding, like, for example, people thought, oh, M15's bearish, these shorts still make sense to short from here because the M15's bearish. But, you know, it's that next level of understanding using the ranges and understanding structure to understand and know when it's safe to do so, when it's not, because you'd avoided stupid losses this morning if you tried to short from here. But whereas I think people probably would, understanding that, they'd say M15's bearish, it's invalid until it's not. So let's keep shorting until the 15-minute high goes, which, you know, you need to understand that's not the case.
Oh.
Where did you want to add anything there before?
That's one thing, Jordan, that I myself through my Instagram, but also sometimes members that join this community, like has been a culture established here where everybody is so fascinated by, oh, they take 5 second entries. Oh, they take 1 pip stop losses. And although I understand that it might be amazing if you come from 10, 15 pips or whatever, a lot of people are not really interested in, hey, but how do you map structure? How do you identify ranges, etc., etc. All they are interested in is, hey, do you execute on the 5 seconds? And then my answer is yes, but like, do you understand that the steps you need to take before you come to a good 5 second entry? Because literally I can teach most of you here how to take a 5 second entry in under an hour. Like, that's not the difficult part, but being able to piece a whole story together that leads to a sensible 5 second entry, that's a process that can take months.
Yeah,
Literally. And the part that people forget is, oh, I come in quantum and I see they teach 5 second entries, and I watch the 5 second videos and I'll be settled. And then after a few weeks it doesn't work out, and then they are like, oh, quantum sucks, or any other community that preaches this. So I truly hope everybody listening to these Zoom calls and watching videos and trying to learn this, the 5 second entries are literally like 1 or 2% of the whole learning how to trade thing.
yeah,
It's the little step
yeah,
when it comes to analysis and execution. The absolute last step you should worry about. And even if you say, wait, I'm going to wait with 5 seconds, I'm just going to focus on structure, focus on ranges, identifying high probability supply demand zones. Then if you have a really solid process, then that eventually leads to being confident in executing on the 5 seconds. Because I myself, when I started out with 5 seconds and I thought I found the holy grail, like most of us sometimes do, like you find it. And then, of course, it doesn't work out as you expect because there is so much more to it. So please understand that these second executions are the last part of the execution analysis thing that we teach here.
yeah,
Like these ranges and stuff, you should put way more effort and time into understanding them and understanding structure than you should trying to figure out how it works on the seconds, because it's all about the zones. It's all about structure and your confluences. And then I always say a good trade takes 10 good decisions. Top down, you start on the daily, and every decision you make should be correct with the information that you get presented. And then eventually, if you did 9 things correctly, then you hop on the seconds to execute, and then there's still a chance it doesn't work out. But if you fuck up at the third decision because you don't know how to map structure or fail to mark the correct range, and then you say, I failed at my executions. No, maybe you failed at mapping your 1 hour structure or your 50-minute structure, or maybe you selected a not so good supply demand zone. So please, guys, always stop down and don't be so focused on those seconds, because it's literally the last thing you should worry about.
yeah.
Okay, I'm going to mute myself now, Jordan. You go.
Yeah, before we'll go back onto that. Yeah, just literally as Wes said, because just I'll touch on that last little bit. Like, people do get excited because, 1 to 2 pip stop losses, depending how aggressive or how tight you want to go. It's like, coming from what most people have done before, it's crazy. And like, I've done before, I've traded seconds so many times. I've traded seconds for ages. I got rid of them because I thought they're not for me, but that's because the understanding wasn't there. Like, I used to use them incorrectly. My structure wasn't correct. I didn't have this understanding of structure. But when you understand structure, trading trading becomes a whole lot easier. Like, for example, both if anyone's seen the Bitcoin scalping thing that I posted.
Yeah, exactly. It was what I was going to say. That video by far got the most views ever for you because you did second stuff.
Yeah, when I posted that 1 second, when I posted that 1 second Bitcoin scalping thing, people went insane. And then I'll show you because I was sending the thingies to Wes before it was happening, and it was all traded just on structure. Like, it was all just structure and ranges, because you have protected and weak levels. And then you have your supply and demand levels. They have confluences, and it was all based on structure using the 1 second up to the 1 minute. And it was like 136R in like 30 minutes. And I was sending it to Wes as I was doing it. So that's what I mean. Understand structure first. Anyway, we'll keep stopping. We'll move on from that. But yeah,
important piece of waffle, guys.
Yeah, waffle.
Ingrain it into the brains.
Right. Okay. So, right, what we'll do is we'll talk about. Let me remove that because we weren't in a supply range at that time. We're in that. Okay, so where did we come from here? Okay, so we understood at this moment in time. Now, if we go back to what was the first? Was that Thursday? No, Friday, right? So I didn't trade Friday personally, but we just want to talk about the logic behind this, right? So where can I find that scalp? If you look at my Instagram, it's my most liked post. It's got like 1,300 post likes. It's got the trading view link in the description, and you can see it. And I fully annotated everything. I traded just the 1 second chart on Bitcoin, and I literally annotated it as I did it. And I took it was something stupid. It was crazy, but yeah. So no worries. I'm not going to say I'm going to start teaching people how to scalp because that's not what we're here for. But the logic's there to trade however you want, and that's why we talk about the market's a fractal. You can trade this you can scalp, you can swing, you can intraday, doesn't matter. So, right. So if we just go back to Friday, okay, we got this mitigation into this supply level right here, and at this moment in time now, before this low went here, this was still a protected low, and this was a weak high. Okay, so longs, if people were looking to take longs, potentially, it's not invalid to do so, right? But what you've got to understand is the bigger picture swing structure being this here. This was the swing. We got a valid mitigation into this whole supply range. Okay, and if you go down, it does mitigate something, but we had the higher probable level being this sort of 4-hour level here. But you understand we've had a mitigation in premium inside a valid supply range. And if you go down, there's something valid that is mitigated. And then we can see now, again, understanding the utilization of ranges, we've gone from this demand range to a supply range. Okay. And we started pulling back here now. So if you were looking to take longs, it's not invalid to do so, but we'd never assume structure, which is what we always keep talking about. Okay. So if we come to Friday, I can't show you all the trades that were there because I didn't actually trade it. But when I had a look at it here, we had this valid demand level here. It's perfectly valid to look to long from. If we just show the flip across to the supply level here, you can see it got the mitigation, but then obviously came back in. Okay, so we got this demand level right here, perfectly valid to long from. Okay, and then we had levels potentially down here and down here as well, but we never assume structure, right? So it's perfectly valid to look to longs here. Did anyone take any longs on Friday from here? But what we've got to understand is that's very messy. What I'll do is let me clean that up, right? Let me clean this up and we can go over this again. Excuse me. So we can go over structure here now and just map out structure first of all, right? So this is the understanding the utilization of ranges and how the market closed. I remember this now from the market breakdown. So even though I didn't trade it. So from the market breakdown, if you guys saw it, we understood here that if we just have a look here, we had this breaker structure right here. Okay, was it that break? So that was, no, sorry, that was the FTC followed by the break. So this was the protected high. Okay, and this is where the FTC stuff comes in. So we can see this higher to this higher low, to this higher high, this lower low. This didn't break structure. This then became the breaker structure. So it's the highest point from the first FTC. That is then the swing low. So you can see lower high, lower low. So this was the protected level at this point, which you can see price came up to. Okay, price came up and then it put in a new lower low again. So we can see here once again, this is where the utilization of ranges comes in. So we can see here now, once we got this new lower low, lower high, we can see we got these two FTCs, but understand the utilization of ranges. Okay, so we can see the first range was this range right here. Okay, so you got this supply range. Okay, price came down, price came back up and created a new supply range, being this one right here. Actually, I won't draw them across to make it a little bit easier to understand. Then we had this one right here. And then we had this one right here. And you can see how these ranges consistently held, right? And this is why we always say we don't assume structure, okay? So we understand the possibility of, we took out this major swing here. We could potentially fuel a pullback up into these levels. I think people were forecasting this as well. Oh, my monitor's going to turn off, 2 seconds. There we go. Right, okay. So we understand we could fuel a pullback. Longs are still valid from here. So as we were getting mitigations into these demand levels here, you can look to long, okay? But when we have a look structurally, we're still contained within these supply levels, right? And we can see right here, we got this supply range, okay? Price came back down, came to this extreme, okay? And there's a perfectly valid short to take there. Now, let me just have a look at the session times that we had here. If we went down to a lower time frame, we'd be able to find that. Okay, but you can see how these ranges hold: lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, and we get a lower high before a new lower low. So only until we get structural confirmation bullish does it invalidate our structural idea to look to come and take shorts, for example, because we understand if we got a bullish break of structure, then this would have meant that then we could have looked to potentially then get confirmation price wants to come bullish. But if we have a look at the swing structure, we can see lower high, lower low, break of structure, FTC, FTC, and then we got a break. Okay. So for me, when I was looking at this afterwards, okay, we can see here that this was the high that then led to the break of structure. But then what we do is we look within the ranges within the swing structure. So we can see we had this range right here. We came out, we mitigated into this supply range. And then we came out of this range, mitigated into this supply range. And then once again, we had this supply range. We came and mitigated out of this supply range. And then this was the supply range that essentially led to this demand range failing. So as we forecasted in the market breakdown, again, on market open, we were looking to see if we could potentially take shorts from here, because even though, and this is where the ranges comes in once again, right? Because people might be looking at this and saying, we've had 15-minute chalk, for example, so, what does this indicate? Yes, this 15-minute chalk does signify a shift in order flow, but understand structurally, we're still contained within a supply range, right? So shorts are still valid until the supply range fails. So you can see we had this range, okay, price comes and mitigates. Then we had this range, okay. Now we understand that we could have potentially looked to take shorts from here on London Open, which is what I was looking for. But because we had these ranges still being held, these demand ranges, and this at this moment in time being weak during session, I wanted to wait for an M1 confirmation or more structural confirmation that price wanted to come lower, because we understood that, yes, we were still contained within a bearish swing structure right here. But when we draw across this supply level, okay, we got the mitigation into the supply, which is the mitigated wick. But for me, because when we look at the ranges internally, let me just go back to there. We can see here now that we had high, high, low, high. This was still weak. And then what happened is, as price came and took this high right here, okay, so we can see if we look internally for a minute, we can see we had this logo, and then we had an internal break bullish. Yes, it was only with a wick. I was concerned about which direction it was going to go. So I was looking here, potentially, after this break, that this could potentially get ran, because we have potential alignment occur in regards to this, and we could potentially come and test higher. Now, when I was watching this, and we have a look at M1, price gave an M1 change of character at the top, but price didn't give us an entry, right? Which is fine. But I think me, including quite a few people, why is there like two charts for everything? But this was the trade that we were looking for, and this is the one that I caught. I'm not too sure if anybody else caught this one. But again, this is understanding the utilization of the ranges and when things are weak and when things are protected. So if we look at structure here now, we had a bearish break of structure. Lower low, lower high, lower low, right? Following this break here. What's the expectation? Lower high before a new lower low. Okay. So anywhere from this. So again, this is where the ranges come in if you want to do it, but it's the highest point that led to the break. So you can see this here being the supply range. So anywhere within this supply range is valid to look to short from following the break. So we can look to try and find valid supply levels within. Okay. So I identified this. There was also something here and here as well. So if we drop down now to the 5 minute, so you can see here we had this. There's potentially something here as well. And then we had this unmitigated wick. Okay. So if we have a look to the left and just see what things have like mitigated, we can see this sort of flipped something here. It's nothing too clear. And then again, this just broke below this. So when I was looking at this one here, again, it's mitigated something in this wick. The flips weren't too clear, but I was confident either in this level here, or this level here, because all we're trying to do is find them unmitigated levels. So as price came into this level right here, I understood all I was trying to do is catch lower low, lower high, lower low. So if we come to M1 and we look at the entries, right? So what happened here is we had this refined M1 candle. If we look at it from here, we can see we've got this buy to sell. We can see it's taken liquidity, okay? And there we go. It's taken liquidity. It had inducement just above it. Okay, so it had a lot of confluence to it, okay? There was still valid reason and cause to come and test higher here or here, but I was confident in this level, okay? So when we came and we mitigated into this level, this was using the ranges again to understand when a trade idea is valid, okay? Because even though we were still contained within a bullish swing leg of price, it was still for me a valid trade to take. And people might think, well, this doesn't really make much sense because a lot of people don't view structure or ranges the way that we do, right? So just try and understand this for a minute. I think I've duplicated everything accidentally. Oh God, excuse me. Right, okay, so if we understand this for a minute, okay, let me clear this up and we'll take it back for a minute, okay? And we'll try and understand this together. So when we understand the entry execution here, what have we had straight away? First of all, we've had a mitigation into higher time frame supply. Okay, number one, that's what we're looking for. We generated these equal highs liquidity just above this is actually a refined 15-second level as well, right? So I was quite confident in this supply level to look to take a trade here. Now, when we look for a 5-second change of character, the 5-second change of character is here, right? This is the 5-second change of character. Now, understand and use supply and demand ranges structurally, okay? Demand range, okay? Drag this across. So we are currently high, low, high. We're contained within this bullish swing structure, okay? So what we can see here now is when we look internally now, we can see we're putting in lower low, lower high, lower low, lower high, lower low. What have we done? We've mitigated valid demand at almost the extreme of this demand range. Okay, you can see we've obviously hit something more refined here. But what do we see now? We've gone from a supply range, okay, supply range into a demand range. Okay, so we can see we had this demand range right here, which we can see was left unmitigated. And obviously we know every single range has to be mitigated. It can be left unmitigated and be a reaction for the future, which is exactly why we got this reaction here. And then we follow the ranges up again. We get a new demand range right here. We can see here just broke below, but that's obviously seen as some sort of liquidity sweep or whatever. I swear it never used to. I swear that wick never used to. But anyway, but again, we look at it, prices come down, and then we have a look again, and we can see now we've created this again larger demand range. So we can see this sort of demand range once price came and took this high here. I saw now demand range. This I swear this held demand range. Okay, and then what did price come and do? So this is the same instance as this morning. This high is currently weak. Okay, so I was not looking to short this right now, but then what happened? Understand the logic. Okay, structurally, yes, this is your change of character. Yes, that's your change of character, shift in order flow, but structurally, you haven't shifted bearish yet. You haven't had that confirmation. Okay, so because, for example, what could have happened here, price came down, got your change of character, mitigated demand, and continued higher because you haven't structurally shifted bearish yet. But when we got this internal break right here, okay, we've now shifted bearish. What have we done? We've now put in a new supply range and a higher time frame supply range. You can see this, right? So now what's happened? The demand ranges have now shifted to supply ranges. So again, that theory behind is similar to that long that I wanted to take this morning. This original mitigation can be deemed as weak, okay? Hence why then this was drawn in green, sorry. I potentially saw this as a weak low, okay? Reaction, right? And then I was looking then inside this range because again, I was like, this is where, because it wasn't a 5-second chop flip entry, but I was playing the logic of weak and strong highs here. It's the same as this morning with that long. It wasn't so much taken by a clean entry model, but it's taken by the understanding and logic of structure. So I saw that as price came up and tapped into here, this supply range should hold. And don't get me wrong, this by all means could have continued to take me up bullish, right? Because what could have happened here, because we didn't have structural confirmation, price was going to come down here because we were still contained within this overall bullish swing leg of price, okay? Because you can see high, low, high. This was just weak. So what could have happened is price could have come lower, tested deeper down into here, and then continued higher. But I would have been prepared for that if that would have happened, okay? Because I understand the narrative I'm trying to play is I'm trying to take a short to come and take this lower. So I understood at a minimum, I was in a safe opportunity catching this short because I understand now following the ranges, this low is weak. And then if price does want to react to here, I'll monitor how it reacts. Okay. Because I understand this could still put in a new higher low before a new higher high. Just watch how we react here. And then obviously if I would have seen price again, show intentions to come and test higher, I would have reacted to that. But I was in the trade if price did want to go short, which it did. And that was the logic behind that trade. And then again, like I didn't trade too much afterwards, simply due to the fact that I was sorting out videos and things, because I haven't really been trading New York that much. But again, I think this one right here, there was a valid short to take. If we just have a look again, following the same understanding of the ranges, you can see, I think this was just after New York. Okay. I know someone asked why they tried to long here, and why it was invalid. Understanding again, structure. You had this bearish breaker structure here, lower high, lower low. We got that change of character and that shift structurally, but understanding that we're still contained within the bearish swing. And when we came and mitigated this supply right here, and you got that 15-minute change of character, again, that potentially now is weak. And someone asked about that the other day. And then that was all I took there. Does anybody have anything in regards to this PA that they want me to go over here? Anything people want me to go over while I'm here? Ask away. No, doesn't seem so. Okay. And then, no, that's perfect. Cool. And then again, if we're just going to go over the shorts yesterday, once again, we were at the extreme of this range. We can see we had we're at the extreme here of this whole overall bullish, daily internal structure. So again, longs will look valid to look for here. And we understand that this was still protected. So the shorts that you were taking here, you'd have to be aggressive with your management, because we still understand that if you're taking shorts, they ran beautifully, but this was still protected and we don't assume structure. Okay. So when we go into yesterday, and I think Wes took a trade, there were some nice shorts. But when you mitigate into these 15-minute demand levels, can you look for M1 entries? Yes, you can, because, or even seconds, if you mitigate something refined enough, because what you're trying to do here is catch the higher low. For example, you're trying to catch high, higher low, higher high. Okay. You understand that you haven't had structural confirmation yet, but you can still use like M1 chocks, for example, if you mitigate the right level. Okay. So when we had a look at this, I didn't try and take any look of actual longs to take. I saw a couple, but we understand that again, when we look at structure, what do we get here? We understand we had lower low, lower high, lower low. There was actually a long here actually. Oh, this was the long that I tried to catch actually. I'll show you this quickly. I remember I took this because I was trying to catch that. It's quite a daft trade really. I'll be honest, but it wasn't. It was very aggressive, but it was basically we mitigated a valid M1 refined level to the left. It was a solid, it stacked confluences for me to come and look to take it long to potentially fulfill the daily internal structure expectation. But what happened? Price came, we got this 30-second shift in order flow. Where is it? There. So you can see we took the low, took the high. This was the flip zone right here. And as price came down, as price came down into here, I got involved in a trade and I didn't cover the low. It just spiked me out and then price went up. It ran, I think, like 13% or something, but then came and tested lower because obviously the intentions, I got in with a tighter stop than that, I think. But yeah, so that was that one there. It wasn't a great trade, but I just want to then talk about this structure here. Okay, so there's two things, and this was again what Wes took, and Wes can add anything on afterwards. But we can see here, structurally, swing structure, lower low, lower high, lower low, expectation for a new lower high before a new lower low. So what do we get? We got the breaker structure right here. Okay, so now what's the expectation once we've had this breaker structure? This is the protected high. This is the weak low. We have an expectation for price to come and put in a new lower high before a new lower low. So again, when we try and identify valid 15-minute supply levels, if we have a look, potentially something there, but you can see this candle as well. It's not too clear because this candle here appears to have mitigated this candle. So I just drop down to like an M10 maybe and just see what's going on here. Maybe an M5. Okay. And you can see here now that what have you got? You've got this level right here and this one as well right here. So obviously understanding that, this was quite if you want to call it not dodgy, but we didn't really mitigate anything as significant to say this one right here, which is, I think this is the one Wes took. But the logic here is still the same. You know, if you have a look, it's still a supply range. Okay. If we understand that this was the high, this was the low, we're just trying to catch the lower high before the new lower low. The higher probable levels is going to be this, but you can see this buy to sell engulfed. The 50% wasn't mitigated and it didn't even come up to that anyway. So this would have been a little bit of a difficult trade to take. But then if we just go back down to the M15 and we can see here, and I think the logic behind Wes's trade being the supply ranges, I'll clear it up just a little bit. If we just do that, hide that. Again, you understand that when we've taken that low out
structure.
Say again.
Everything was bearish. The 1 hour and 15 order flow, and even though we had the demand mitigation,
everything was still bearish.
Yes, it could have gone long from here. And if we got clean bullish intentions, I was happy to play that. But by the moment I took the short, I basically had everything in my favor, or more than enough in my favor. I had in the back of my mind that we made a premium mitigation on the daily. Combine that with everything being bearish here. I, of course, managed accordingly, like I didn't target the daily low, for example. But it made sense for me to short this. And if it decided to show bullish intentions, I understood why it could happen. And then fine, I take a break even, perhaps a loss, and then my narrative shifts. But I had a short narrative here until proven otherwise.
Because structure never shifted bullish. Despite the mitigation here, structure is still bullish and you don't assume it. So again, once you got this new supply range here, this was a clean M15 POI. And then I've not seen your actual entry, Wes. I just drew on.
It was plain and simple. I took the 1 minute refined zone and I hit it on the 5 seconds because for me it was basically the unmitigated extreme of the supply range.
Yeah. So that's this whole supply range. It's the last unmitigated buy to sell of the 15-minute range. And then here, we just bring it back.
I got literally the perfect fill on the tick.
Yeah. So literally, as price came up, change of character. Yes, you got the change of character here, but you can see where the actual range failed. We've got the interaction to demand here. This then failed. This then became your flip zone. Okay. And we went from demand to supply ranges. As price came into there, you just hit that.
Yeah, my exact entry.
Yeah.
I believe it was a 1.4 or a 1.5. I think.
I've got 1.5 there.
Or 13R.
Yeah. And yeah, I think, is there anything else that we need to go over there? I don't think so. Has anyone got anything they want to ask? Anything? Again, I'm sorry, I just keep rambling on and just chatting absolute wham. No, it doesn't seem like it.
I think that's a wrap.
Yeah, we'll call
we
it
are
a wrap.
only left with 11, so people are leaving the session. So I think you've gone over enough price action.
Yeah.
An amazing explanation. So I think if people are satisfied and don't have any questions, we're going to wrap this one.
Cool. Right, perfect. Thank you very much. Spot on. Yeah, as always, have a good New York. I won't be trading New York because I've got to go pick up a brand new bed because it's being delivered at my old house. So I've got to go pick it up. But yeah,